What is going on, fellow investors? I'm going to talk about three particular stocks right now in the stock market that do look somewhat compelling in terms of valuation, but they are stocks that I am very much avoiding hugely. Now, please understand, this is not financial advice. This is only my personal opinion, and you are more than welcome to disagree. My opinion and narrative is not going to change in the slightest. And this is a stock that a lot of investors in my comment section seems to own. And I'm going to be honest, I'm not here to validate people's opinions. I'm here to give an honest breakdown, whether you like it or not. In the words of Pluto, truth sounds like hate to those who hate the truth. And if you're going to hate me for this opinion, then so be it. But it's Oracle. Oracle is a stock I raised my concerns at 190, at 170. I did have a video at 140. And now I'm here doing a video at 115. And something tells me I'm probably going to be here in a month's time doing yet another video at sub $100. I have never, in my personal opinion, seen a business in recent years with such a fragmented, fractured fundamentals and financials. I mean, this is a business that from a technical chart, let's be honest, let's look at technicals. It's broken 130 support. It's going to go down to 105. I think it's going to break 105. It's probably going to go down to 80. It's what we call in the free fall stage. And no one wants to be catching a falling knife, do they? Unless you want to cut your hand open. And I think that is the issue we are seeing right now with Oracle. The support levels have gone. Institutions are selling out, and retail is being used as value trap exit liquidity, where I think a lot of people are buying this stock purely because they think it's cheap, and it is cheap. I mean, price to earnings of 20.8, forward to earnings of 15, dividends of 1.57% currently, and growing each year. I mean, the business on paper looks good, but then you look into the fundamentals and financials and you're thinking, hang on a minute, this business by the year 2028 is going to have $400 billion worth of debt. This is a business that no one wants to lend their money anymore. The bond market has said no. The equity market has said no. And when you're expanding into AI data centers and you're living in a world where you are competing with Microsoft's Azure, which most likely will be raising their capex because they're going to be doing it for the full fiscal year on the 29th of July when they do their earnings, not just for the quarter, probably by 100 billion. And you've got Meta aggressively increasing their capex. And you've got Google, as we saw a few days ago, increasing their capex. Oracle's not going to be able to compete because Oracle cannot raise any more money because they have borrowed so much. They have hardly repaid any of that, to the point that people are saying, we're not going to give you any more money because you haven't paid us hundreds of billions of dollars which you have borrowed out. And Oracle's only escape plan is that all this infrastructure that they are building is going to go down to OpenAI. And what if OpenAI defaults on payments? Because this is a business that they're growing their revenue, but their debt is going up linearly. And I'll be very honest, if the AI bubble is to pop, it's going to come from OpenAI. And the first casualty is going to be Oracle. And we're not talking about wounded in action. We're talking about killed in action, killed confirmed, gone to the history books of all these great businesses that once existed. And that is my biggest concern with Oracle. The debt is too much. They are not able to raise any additional capital. No one wants to lend them money. The technical charts look bad. It looks good if you're buying the stock because you think it's cheap. But I will always say to you, are you buying a stock because it's cheap? Or are you buying a stock because it's cheap, but you truly believe in the business? Because if I said to most Oracle investors watching this right now, who is your CEO? Who is your CEO? Because a lot of you guys have got hundreds, thousands of dollars in Oracle, and the CEO is spending this money. Who is your CEO? I can guarantee you half of the people watching this don't even know who their own CEO is in Oracle. The answer is Larry Ellison, by the way, which gets me to think, are we buying this stock because it's cheap and we're hoping and praying, in the words of Bon Jovi, living on a prayer, that OpenAI is going to be successful and maybe just Oracle can make some good money? Or are we buying because the fundamentals, the thesis, the moat, the growth aspect, and the financials look good? Because they are the 5 pillars of investing: fundamentals, financials, growth aspect, thesis, and moat. And none of them look good in my opinion. I'm not going to be buying into a business that is relying on the success of another customer which is currently losing money to be successful, and for that reason I'm avoiding Oracle. It looks great if you want to buy a stock that might just have a good turnaround, and I'm sure you can make some good money on there, but I don't see any good value. I see a good price, I don't see a good value, and for that reason I'm avoiding it. So I'm sorry if I've hurt anyone's feelings, but that's my honest opinions, and I think it's going to go down a lot more. It might go up temporarily, but it's broken 130 support, and that's a big issue. Going on to stock number 2, Tesla. I've been very vocal. Spoke 3 months ago when I done this video, 3 stocks I'm not buying, and Tesla, shout out to them, was in there. Tesla is trading at absolutely absurd valuations. To think someone was buying Tesla at 389 PE ratio is absolutely ridiculous. They did miss it on their earnings, and like I say, when you are buying stocks at ridiculously high price to earnings, you are paying a premium for a reason, and you are paying that premium because you are expecting the business to deliver fantastically on their earnings. And you can't just have a fantastic earnings, you need a miracle of an earnings, and unfortunately Tesla Tesla did not deliver that. You see, the issue with Tesla is they're a great business. I have a mate that works for Milton Keynes Tesla. I have nothing but admiration and support and love for Elon Musk. But the business itself is not a business I want to be invested in, because, I mean, 75% of the business is in electrical vehicle sales. And let's be honest, I know Teslas are popping out everywhere. Two of my neighbours have just got Teslas, but the margins are very slow on these vehicles. Electrical vehicles are very stagnant. They're very saturated. They're extremely competitive sector, and they're huge depreciating assets, far more than petrol and diesel cars. So people aren't really getting into Tesla so much, and they are putting a lot more effort into robotics. The problem with robotics, as we heard from Elon Musk's earnings conference call, is that it's not going to be tangibly materialized for another 5 to 7 years. And a lot of these things that a lot of Tesla investors were buying 5 years ago in the hopes and prayers of haven't lived off. I mean, where is the FDS revenue from Tesla? Where is this robo-taxis? I mean, Tesla investors for years have been saying, I'm buying Tesla because we're going to have robo-taxis and I'm going to drive my Tesla to work, and while I'm at work my Tesla's going to go around and Uber people. Where is that? I mean, I don't think that's going to happen for a good few years. I mean, the amount of legislation, I mean, God forbid if one of these Tesla robo-taxis runs over a kid or someone's dog. I mean, that is litigation lawsuit. We're seeing the same issue with Waymo. I mean, the amount of criminals that are standing in front of a Waymo taxi because it doesn't move, and then you've got another one trying to break into the car with someone stuck in the back and they can't do anything because they can't take control of the steering wheel and the car's not moving forward because there's a human in front of the car, just shows you the amount of regulatory concerns these are going to have. So the issue I've got with Tesla, 75% of their revenue is still saturated with in electrical vehicles, 25% is in robotics. The Optimus robots is not going to be another thing for another 5 to 7 years. I'm sure that will do very well. Millions of pre-orders, as we know, as and when it eventually materializes. But right now it is at a very high valuation. It's not a value stock. A little bit in giga data centers, but yeah, it's very speculative at the moment. It's at a very high valuation, and I think there are hundreds and hundreds of better equities out there that one can invest in at a better rate of return than Tesla. And even right now, guys, the stock's down 35%, and from when it was at its recent highs of 420, and it's still at a forward to earnings of 169 and a price to earnings of 280. It's still overvalued. If you want to know what price I'll be buying Tesla at, $50 a share. There's your answer. And then the last stock is SpaceX, another stock. Again, I was done 6, 7, 8 videos on before it IPO'd, and even after it IPO'd. Crazy stock. The best word I can say is exit liquidity. That's what retail was, and it amazes me that people even got into this stock. Vibes, yeah. We live in a world where there's value investments and there's momentum investments, and then there's investors that get into hype stocks, and SpaceX is nothing more than a hype stock. If you are seriously trying to make me think I'm going to be buying into a business where only one bit of the business is profitable, which is Starlink, think again. If I'm going to be buying a business, I want to be buying a business that is diversified and every aspect of that business is profitable. Look at Microsoft. Microsoft is diversified and they're profitable. Azure is profitable. Office 365 is profitable. Windows is profitable. LinkedIn is profitable. Xbox Gaming is profitable. I can go on. SpaceX, loads of different aspects going in, Starship, Enterprise. The only profitable bit is Starlink. And to think that this business was worth more than Meta on the day it IPO'd, and within a week was worth more than Amazon, which has been around for 30 years and probably one of the best moat thesis businesses out there and one of the most diversified businesses out there, has me absolutely astonished that people even bought in. And I think this stock's going down. I like the aspect of SpaceX. Do I think there's any money to be made in space other than commercial satellites and a little bit in defense? Absolutely not. Do I think we're going to have data centers in space? No, not at all. I mean, the International Space Station took 30 years to build, and that's 150 feet. And people are trying to tell me we're going to have 30,000 feet data centers with all these chips in space. Come on, man. Look, I like Star Wars and Star Trek just as much, but I live in planet realism, not planet optimism. And then on top of that, do I think we're going to colonize Mars and enslave alien species? Absolutely not. I think it's a cool business. It's pretty cool to have. It's a good talking point. I'm here to make money. I'm here to make a good return on investment. I don't think SpaceX is going to be doing that for at least another 10 years. And I'm not interested. I'm not going to be buying a business which is allegedly worth over $1 trillion if they're losing over $10 billion a year and may just be profitable in the years to come. So maybe SpaceX and Tesla can do something if they have a nice merger, and maybe then we could have a discussion as to whether it's worth paying an expensive premium on these businesses. But at the moment, I'm not buying SpaceX. I am not buying, even though the stock has gone down pre-IPO levels, I'm not buying Tesla, and I'm not buying Oracle. And I mean this with love, guys. I'm not here to have a hard go at anyone that's bought it. Again, this is only my opinion, and that's a great thing. You guys can completely disagree we're just not going to agree on, we're going to agree to disagree. But that's my personal opinion. There is no financial advice. I've given a little bit of an understanding as to why I don't believe in it. And if you want more videos, let me know.